Welcome, I'm Scott Drake, and to this edition of The Tax Lawyer, my guest is Robert W. Wood, Managing Partner of Wood LLP in San Francisco, the author of 30 books on tax law, and writes frequently for Forbes. Rob, welcome back.
Thanks, Scott.
We want to talk about in this new year what the IRS has offered another voluntary disclosure foreign account program, which is something we didn't know about last year, but is actually happening, correct?
That's right. I have to say I was wrong. I was surprised. The IRS had said repeatedly, various people, including the commissioner, that there would not be a third chance for people to come forward. When the last program ended in September and December, the reason I say 2 dates is the deadline to get into the program, to sort of get under the wire, was in September, but there was an extension available to submit amended tax returns and FBARs, these foreign account, bank account reporting forms, until December. So a lot of people were rushing, thousands of people, to get all this material in. And lo and behold, in January, this month, the IRS said they were announcing a third program. Which is, a great thing from my viewpoint, and I think from a U.S. taxpayer perspective, because it's another chance. Many people are still hearing about this for the first time, still sort of waking up and finding that they have either wittingly or unwittingly violated the law, and it's a chance to sort of get it cleaned up in an orderly way.
And are the parameters for this program the same as the previous programs? Is there anything changed about it?
Yeah, almost the same. The big difference would be that in the 2009, you can see the progression. In the 2009 voluntary disclosure program the IRS had, the penalty was 20%. So basically, you had to pay, you had to file amended tax returns, file FBARs disclosing the accounts, and the amended tax returns would simply disclose the existence of the foreign account and report the interest, income, or dividends, whatever it might be. In some cases, it would be gains and losses from sales of securities in a foreign account that would report the income. So you paid that. In many cases, that was a small number. Many people, in my experience, even had losses. But the big penalty was 20% of the highest account balance. So if over the 8-year period, so if you had $1 million at the height of the market, so to speak, your 20% penalty would be $200,000. The next program in 2011, pretty much the same program, the penalty went up to 25%, so $250,000 in my example penalty. The new program, which has no termination date so far, which that's a good thing also, the program calls for a 27.5% penalty, so slightly higher than last time. Again, in my example, $275,000 penalty. There are some penalty relief provisions for people with small balances, but that's the basic penalty structure.
And as you said, there is no foreseeable end to this program, is what you're saying.
Yeah, I mean, once again, I guess you can view this from a couple of perspectives. I think it's a good thing because I think more and more people are reading. It's not everyone is focused on tax, and especially if people have their sort of feet planted in a couple of different countries, and they may be U.S. citizens, but in many cases haven't lived here in a long time. So I think it's good not to have a deadline. I guess, and I can tell you, having been a lawyer going through this in the 2009 and 11 programs, a lot of people come in right at the deadline, and so it's nice not to have that. I suppose the downside of not having a deadline is my prediction. There will be a lot of people who think, I'll do it later, I'll do it tomorrow, I'll do it next week, I'll do it next month, there's no deadline, I can always do it next year. And so that would be kind of a negative, but other than that, I think it's positive.
All right, Rob, thank you so much.
Thank you.
You can find Rob as the tax lawyer at Forbes.com and at Wood LLP in San Francisco. I'm Scott Drake. Thanks for watching.